Hello and welcome to AI Market News by LM. The S&P 500 and NASDAQ have just smashed through all-time highs. But with so much tension in the world, the big question is, can this rally possibly last, or is a crash just around the corner?
So in this explainer, we're going to break down the forces at play. We'll look at the record highs, what's driving them, the risks that might be hiding in plain sight, and what we all need to watch for next. Okay, let's dive into this.
First up, let's just take a moment to look at the incredible numbers that are making headlines right now. The S&P 500, well, it has surged past the 7,000-point mark, closing at a fresh record. And this reflects a really sustained string of gains over the past 2 weeks. And it's not just the broad market. The tech-heavy NASDAQ also hit a new peak, extending its longest winning streak since last year. So what in the world is fueling this powerful rally? As seen in the provided information, the market's confidence really seems to be built on two major pillars: a little bit of geopolitical hope and a whole lot of technological strength. There's this hope that a fragile ceasefire in the Middle East could actually lead to a more permanent deal. And that hope has eased fears of a wider conflict, which in turn has calmed oil prices and boosted investor sentiment. And this just brilliantly illustrates the market's forward-looking optimism. But it's not just about peace talks. The relentless, and I mean relentless, demand for AI continues to propel tech stocks higher and higher. But as all this euphoria takes hold, some warning signs are beginning to flash. Let's move on and see how this is building up. Which brings us to the other side of the coin, here. Is the market's optimism kind of blinding it to some potential dangers? Now, what's really interesting here is that a reading of extreme greed can often be a contrarian signal. It can suggest that the market may be overbought and, due for a correction. And it's not just a sentiment gauge. Global financial leaders are raising red flags. They're suggesting that the true economic fallout from all these supply chain disruptions, well, it has yet to be fully priced in. Another area of risk is popping up in the global currency markets, and this one is centered on the Japanese yen. So the yen has been falling sharply, and it's getting really close to 160 to the US dollar. Now that's a level that has historically prompted Japanese authorities to step in and defend their currency. And while the dollar is broadly stable against other major currencies, its strength against the yen highlights a pretty significant point of tension in the global financial system. So with this balance of greed and fear, what should we be watching for? Okay, based on the economic calendar from investing.com, a whole series of speeches from U.S. Federal Reserve officials are scheduled for today, Friday, April 17th. Their comments on inflation and what they might do with interest rates, you can bet the market will be scrutinizing every single word. So the crucial point is this: the market is celebrating peace talks and AI growth, but it remains really vulnerable to warnings from global institutions and these simmering currency risks. And that leaves us with a critical question about this rally's foundation. Just how strong is it really? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.